Hi, this is Tom from Dividend Attitude. Welcome to this brand new channel about dividend growth investing. In this channel, I will show you how you as a European can also use this stock investing strategy to your advantage. And as I know you are all in a hurry to go to the next YouTube video, let me show you quickly why you should stay around and watch. Here's what I'm offering today. Firstly, I'll show you my portfolio including the holdings I have and how it has performed so far. And then secondly, I'll show you how much dividends are coming in and more importantly, how I track them. And thirdly, I will give you a sneak peek in how I research different growth companies. And fourthly, I will show you why perseverance is very important in the stock market. So with that out of the way, a little bit about myself. I'm Dutch, and as I'm Dutch and European in a sense, I don't have access to commission-free trading platforms like M1 or Robinhood, etc. But what I will show you is that the success of the dividend growth strategy does not depend on access to such platforms. I'm actually using a platform called Bing Bank, which is now part of Saxo Bank. Like I said, I will show you the performance it had so far, and we're gonna focus, of course, mostly on the dividends. But I'll also show you the total performance, and I will show you the holdings I have. For the purpose of these videos, I will actually also start a portfolio on the Giro, but I haven't set it up fully yet. So I'll show you that in later videos, and I'll do this because I know a lot of European countries have access to this broker. So here's my portfolio, and I actually use two ways to track it. I have here the information from my broker, but it's quite limited, and I also think it's not accurate because what you see here, and I'm sorry that all the titles are in Dutch, I couldn't find a way to set it to English, but I think it's pretty straightforward. So what you see here is my unrealized gains of 22% and unrealized gains of 1467. This is excluding dividends. What you see more is that my portfolio is currently 8100 euros. Together with the cash I have from the dividends, it's close to 9000 euros. And for some this might be quite a lot if you're really just starting out, and for some it might be like it's nothing. What I want to show you in these videos is even with a portfolio like this, you can grow it to substantial amounts if you're really dedicated to keeping your finances in order, to budgeting, stuff like that. And I'll actually cover some of those topics if there's demand for that in later videos as well, like how I do my finances, how I budget, and how I use different financial principles like pay yourself first and stuff like that. All good stuff, but I'll talk about that in later videos. And so getting back to why I think this percentage is not the right one, I think it actually includes the fees I had to pay. That is not entirely accurate because most of the holdings I have here I got from a promotion where I didn't have to pay fees because I got the first 200 euros in fees for free. So if we take a peek at the portfolio I have in Google Sheets, you see it's slightly higher here, and it's actually in dollars as well, so it makes it a bit hard to compare, but I actually prefer to see dollars because that's what the actual holdings are in as well. So I don't care so much about the currency fluctuations. As you can see, I have a bit more information here as well. To get to my holdings, these are all dividend growth companies in my eyes, and they're all growing their dividend except CVS, which froze its dividend for I think good reason because they acquired Aetna. and they actually got into quite some debt because of that, and they're paying down their debt. So what I'm focusing on with CVS right now is if they're actually sticking to that plan, and it seems they are because they're quite aggressively paying down their debt. And I hope they will start increasing their dividends again in yeah, I think 2021. I think 2020 will be too early, but my hopes are on like 2021, and I expect they will start to pick their pace up where they left it, which was in the double digits. Besides CVS, I also have VFC, which is known for brands like the North Face and some others, and they recently split the company, so I got some cash from that actually. I also have Williams Sonoma, and I have T. Rowe Price. And I won't go details overall for all these companies right now, but I'll just go over them briefly. And I have Johnson & Johnson, and I have Omega Healthcare Investors, and this is actually one that recently increased their dividend again. You could see it as a token increase because it was not so much, but I see it as a sign that the company is getting back on track. And as you can see, I actually bought in at quite a low price. My cost basis for this is $27, and so I right now have a gain of 54%, and that's excluding dividends. Here you can actually see that I'm getting almost 177 in dividends pre-tax from Omega Healthcare Investors. So that's quite a large portion of my income, but that's okay because I'm still building it up. Other than that, I have Cisco, I have Qualcomm, which I'll actually go over later on because this will be an example where I think perseverance was important. And I have this utility Northwestern. So a bit more about this sheet. So first row is the sector, then ticker, then the number of shares I own, then the current price, which is imported from Google Finance, my cost basis, and then my cost basis per share and the value it has now. And then you can see the change in percentages and the change in dollars, the weighting in my portfolio, the difference per share, which is imported from Yahoo, the yield, and then you have the yield on cost and the annual income. And then at the bottom some totals, so total cost, total current value, and total change in percentage and dollars, and the yield and yield on cost. My portfolio is currently yielding at 3.9 almost, and my annual income is almost $350 pre-tax. And here below you can see chart of weighting per sector, and this is actually also not a Google Sheet I made myself, but I forgot who did make it, so I can't really give credits. If you're watching and it looks familiar to you, then kudos to you and thanks. So going back to my broker, I can show you here in the analysis tab the performance. If I click here, the performance in 2019. If I set it towards the S&P 500 mini future, you can see the green line is my portfolio and the blue line is the benchmark of the S&P 500. And you can see right now for 2019 the S&P 500, and if I set it since start, you can actually see the performance here again. The green line is mine portfolio and the blue line is the benchmark. That it took a long while before I was actually in the green, so I started in March. Yeah, so it looks like, yeah, I made my first deposit in April. It took a long while until May 2018, so that's a year, more than a year later, before I was in the green. But this is capital gains, and as my focus was on and is on getting the dividend income, I didn't care too much about this stretch. because I knew in the end it would come around. And as you can see, it did, and it actually crawled upwards towards the benchmark of the S&P 500. At the end of 2018, we had this massive correction of almost 20%, which you can see here. And what's interesting is that my portfolio did go down, but not as far, you can see it here, as the benchmark. So that says something about being a bit recession proof, but of course it always depends on which sectors are hit the hardest, and with a portfolio of 9 holdings you're not very diversified yet, of course. So my primary goal now is to diversify into more holdings and into other sectors that I don't own any shares in yet. And if we go to the end, you can see the benchmark is a bit less than a percentage point of my portfolio. What I can show you here as well is the dividends coming in, which is for me the most important. So I go here, USD. So here you can see, if we go back, first dividend started coming in. The very first one was from Johnson & Johnson a few months after I started, and that's because there's a bit of delay. They paid out dividends because usually they are paid out every quarter, and to be entitled for dividends you first have to go through the ex-dividend date, and then the pay date is actually usually a month or something, sometimes even more later. So that's why there's a bit of delay in the paid out dividends. But you can see here they started rolling in from VF Corp and T. Rowe Price Group, one more from Northwestern Corp, and on and on. And as you can see, there's quite a lot of entries already. I actually haven't put in any money since mid 2018. I think Omega Healthcare Investors was my last investment. And that had more to do, not so much with the market, but more with my personal finance situation that I had to take care of first. But what you can see here, that despite not investing, the dividends are still rolling in, and my portfolio still kept growing. From now on, I'm actually going to start actively investing again, so I'm sure that my dividends will grow more and more. So there's actually 3 ways your dividend income can grow, and that is one, through reinvesting the received dividends back into the company, which is called DRIP. I'm actually not doing that myself. I'm just accumulating the dividends to buy new stocks, and that is because I'm still building out my portfolio. I'm not using it, and actually my broker doesn't offer it either. So neither my current broker Bing Bank as my new broker DeGiro offer DRIP. So I have to find other ways to add money back to my portfolio. And the second one is companies themselves are increasing their dividends, which is great because it's like getting a pay raise from your boss without actually having to do anything. You just have to be shareholder, and that's it. And the third one is adding fresh money, which then will turn into more dividends, which then can be reinvested back and then can be increased as well. So it's like continuous circle of adding more money to your portfolio, which is a beautiful thing, and that's one of the things I like about dividend growth investing. So it's basically passive income you're getting because most of the research you're doing upfront before you buy the stock, which can be quite an extensive process. So, like I talked before, a little bit about my research process. So, most of my input comes from a list called the CCC list, the Champions, Contenders and Challengers list. That's a list of all companies, all American companies that have at least 5 years of consecutive dividend growth. So that's a good list to start with. Then I filter, because it doesn't necessarily mean that all those companies are good companies that I would like to invest in. So do some selection criteria like current yield, payout ratio, revenue growth, earnings per share growth. I want to make like a broad selection. I don't want to narrow it down too much yet because there can be some anomalies in the data. So I don't want to exclude too much companies. So then I get a bit of a short list. And from that, I'm going through the list and I'm gonna pick companies that I want to do a quick screening on. So I'm watching the trends of the earnings per share, the revenue, stuff like that. And then I have a list of potential candidates. From there on, the list should be considerably smaller already. Then I'm gonna do some additional company screening, like what is their business about, what is the current management team, and do some research on the management team, like who is on it, have they been on it during rough times, how long have they been on, etc., etc. And of course also to get a glance at current situation of the company, I'm gonna check news surrounding that company, and a great resource for that is actually a website called Seeking Alpha, which I'll also show later in the video. And then I have a list of candidates, and then I'm gonna take a look at the valuation. There's a couple of ways to do that. One thing I like to do is to use something called the dividend yield theory. And in short, what that means is you check the current yield against the historical yield and check if it's on the high side or on the low side. And dividend yield theory was actually coined by Geraldine Weiss. Then it depends on how the company is valued, because I only like to buy companies that are currently undervalued. If the value is still too high, I put it on my watch list. I have a watch list in Seeking Alpha actually. I have both the app and the website, so I can just check it daily. And if it's undervalued, I'm strongly considering buying that company. And then on to the last part. I'm going to show you why perseverance is important in the stock market and why a long-term view is important. The time frame I'm going to show you in this example is not necessarily long-term. I think it's around 2 years, but still it can feel like a long time. So it's important to keep a mindset that you're in it for the long term and that you're not a trader but an investor. That's a big difference. So I'm going to show you example of company I bought, Qualcomm, and as you can see I bought it at the end of May 2017. And if we then go to the price chart of Qualcomm, yeah, so I bought it around here, 57.52, and as you can see, quite the months after that it only went down and down, then it went up for a bit and then stayed stable and then down again. And same thing repeated in 2000, end of 2018, and then it came down again. Took until, let's see, like right here. So that's almost 2 years after I purchased it before it finally broke out of above the price I bought it at, and now it's currently at $82. But during that time I was actually receiving dividends while waiting for the price to go up. So like I said before, I'm not focused that much on the price. So as you can see here, 2017, 291, and that's for 6 shares, so that's why it's not that much, but still it's dividends coming in that you don't have to do anything for. Again, 291, if we go to 2018, 291, and here you can actually see that they increased their dividend like they did the years before as well. So 316, 316, 316. In 2019 again 316, and then the price started going up. So I received like $31 for waiting, for not doing anything. So that's, yeah, that's the beauty for me about dividend growth investing. Your dividends just keep rolling in despite what the market or that specific stock is doing. Another example of that is CVS, which I can also show you. So as you can see, again, I bought CVS around the end of August 2017. And then if we go to the graph, the 5-year graph on Seeking Alpha, I'm a bit confused by the date notation always, because for us it's the other way around. Anyways, around here, like $75, $76. And then it took a long while and it's actually still not there. Get back to that price point, and that's because there's a lot of negativity around the stock. At least there used to be, but now they're rallying up again, and that mainly has to do with amount of debt they racked up in their acquisition of Aetna, and that's also the reason why they actually didn't increase their dividend. And it's the only company in my portfolio which hasn't increased its dividends. But like I said before in the video, I'm fine with that because I know what the reason is. I expect them to start raising it probably 2021, 2022 when they have paid down their debt. But point of my story was that again, while I'm waiting for the price to come back up, they have been paying me dividend of 12.75 there and 4 times in 2018 and the same in 2019. So I'm getting paid to wait, which is of course pretty nice. Just like getting a paycheck from your work without actually having to work, so that's good. And that's actually it for today's video. Some topics I plan to talk about in the future, but I would really like your input on that as a listener, what you would like to hear. I'm planning to talk about how I make my budget and what my assets and liabilities columns look like, what my end goal is, and how I plan to get there, how I plan on increasing that income besides a salary from my job. So yeah, if you like what you see and you would like to see more of these videos, please subscribe, like and share. That will really help this channel grow, and it will give me much appreciated feedback. So yeah, please let me know in the comments as well. See you next time. Bye bye.